Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, October the 4th. The year's 2023. Let's talk trading. Trading stories. We tell ourselves trading X is risky. These videos are for educational purposes only. Your results may differ from mine. Trading X is risky. I don't mean X as in the stock X. But, some people say, trading stocks is risky. Trading Forex is risky. Trading crypto is risky. Trading currency is risky. But I read in a newsletter that I get, or daily email, whatever you want to call it, and the trader said that, trading isn't risky. It's the trader that is risky. It's the trader that takes the risk, because he defined risk as, the amount of potential loss. And, that kind of gets right back with, the risk management, that you don't lose any more than you're willing to lose on a particular trade. That's the real risk. People say trading, before the news, during the news is risky. Well, once again, it's how do you place your stop? How do you calculate the risk? So it's up to the trader whether or not a trade is quote unquote risky. I mean, there's always a potential for loss, but the question is, how much are you willing to lose? Some of us are willing to lose a lot more than others. It's like this morning, I was talking with Walmart, and right before the news came out, I put a trade on, which is crazy. But the thing is, I was only trading 1/10 of the size that I normally trade, because, just to let you know, I was still horizontal, in bed, trading off my phone. It's like, a bunch of no-nos. It's bad enough trading in bed. It's even worse using the phone. I used to have one of the computers up there, and sometimes I would trade with my laptop upstairs. But anyway, so it went against me because I went short. And at one point I was down over 100 pips on, I think I had 4 or 5, maybe 6 trades going. And then it all came back, and it's really funny because for the day, if you look, I had like 22 trades, 44 pips, and 0 losses, because, a lot of times, one of the stories that I like to tell is that you look at these news trades sometimes, and price shoots up, and it comes all the way back down, because usually, this is a big bar, and what a story is, it's a return bar. And I was also, talking with another trader, and we were taking some shorts using some outside bar trades and picking up some pips here and there. But I wound up kicking myself. I'm mad with a profit, because had I done nothing but wait for price to come back to where it was, instead of 44 pips, I calculated I would have had 144 pips. But instead I was, just taking out a little here and a little there. So we just have to be mindful of risk, and not let things get out of hand, because that's when you go on tilt, and the next thing you know, you've blown your account. And the funny thing is, had I been downstairs, on my computer trading normal size, I would have never put that first trade on. No. Not with the not at that level. Not a full position. So it's just something to keep in mind about risk, is that it's not the trading, it's not the market, it's you, the trader, whether or not you want to do things that are quote unquote risky. One of the things is, you don't want to trade against the H1 candle color, or you don't want to trade against the M30 candle color, or maybe you don't want to trade against the H4 candle color. It just depends on what you want to define as risky. So in this particular case, going long here is really risky, as opposed to going long looking at this chart. Oh, that's probably an okay trade, considering we've already covered this candle, and you might want to go for the cover here, actually more of a M30, which it came down, covered, and then reversed. So now it's like you're going to maybe cover that wick and break out. And we just had the top of the hour 8 minutes ago, or actually, yeah. And so what did it do? M30 came down, covered this candle, and reversed. Another story that we tell ourselves. So, but back to risk. You just really have to understand that anytime you put a trade on, there is a potential for you to lose. It's a possibility. And you just have to realize that. And because you don't control the outcome of the trade, you can control how much you're willing to lose. Now, of course, something weird could happen, and it could, drop like a rock or shoot up like a rocket. But beyond those, black swan type events, you pretty much can control the downside risk. And then if the market smiles upon you, you can then take advantage of some of the upside profit. I mean, for example, if you were, using this chart to trade, you can see here, we came down below this 10% line, a few times, and finally put on a 2-ball somewhere around here. Now it's put on a 3-ball, and you see we've got new fibs. So it's like, okay, this thing will probably expand. Where are we? We're at the psychological 25. So what are they doing right now? Story I would tell is they're running the stops over here because price came down. People probably shorted the 25. And now anywhere from, say, 20 to 30, there's stops in there. So people will be protecting their downside. And what happens? Price likes to run, seems like to run those stops. That's what I had said earlier. When price got up to 75, I go, it's probably needs to come back down to the 50. Then it needs to come back down to here to fill that imbalance. Now it needs to go on the other side of 25 to run those stops. I was telling stories the whole time. Just so happened they played out. And it's kind of funny sometimes, because that's why I talk about believing your own press releases. You can say these things and analyze the chart and quote unquote make these predictions, but that's all they are. And you have to understand that things might not go as you predicted, and if they don't, you have to decide when enough is enough. So for example, here you might say, well, we're like 91 pips above the low, and so if this thing starts to come down and it puts in a 1-ball, maybe I should get out. Or maybe right here I'm looking at a 3-ball. Things are going up. We've got 13 pips above the H1, the M30 and M15. Now we're getting a bearish candle. And you might say, well, you know what? We are still above the EMA 5 here. But here we've got a couple below. And so maybe here at 1.9, maybe I'll give it a couple pips if I'm in profit, and to protect myself. So, if it closes below indicator 2, or maybe even touches indicator 2, it's like, nope, I'll get out of the trade. Otherwise, maybe I want to ride this sucker and see how high it can go. So as long as it stays above the indicator 2, I'll stay in the trade. That's one way. Me, I see a bearish candle with the 3-ball on the top. I usually like to go short. And so now we've got a flip-flop box forming. And we just have to see what happens. But, you know, then again, looking at these ranges for the hour, for the half hour. Let's see, do I have a range chart here? No, I've got bars in a row. Here we go. Looking at these ranges on the 1 minute, at the 5, let's see, 30. And we're at the 87 percentile, H1. We're at the 63 percentile. So you can see we've had some, over the past 4 hours, we've been over 20 pips each time. In fact, we've been over 20 pips out of the last, not including the current bar, but only, 7 out of 8 bars? No, 7 out of 9 bars over 20 pips. So, with 17 being the lowest. So there might be more gas in the tank. We're like touching indicator 2. Can we crawl above it? You know, there's all these different stories, but you know, when you're talking about the risk, you're saying, okay, maybe I'm up. Do I want to, you know, take the chance to try and go for a few more pips? Or do I want to just say, you know what? The pips I have are more than enough. Exit the trade and wait for another setup. Because, you know, one simple thing to ask yourself, if you were going to stay in this trade, if you were long, let's say you got long here, and you're up 14 pips, almost 15 pips. Question is, would you buy right now? And if the answer is no, then get out. Because you're already in the trade. And if you're not willing to add in, then maybe you should just get out. Because if you think it's risky to add in, then maybe you don't have the confidence, so take your money off the table. I mean, that could be a real easy way to decide whether or not to stay in a trade. And as you can see, it's continuing upward. But you have to figure out what stories you tell yourself. But when it comes to risk, that's a story that you might want to definitely have one story saying, I'm not going to lose more than X pips or X dollars or X percent per trade, and stick to it. That's your story, and you need to stick to it. You set your position size and stop loss accordingly. And that way you maintain the least risky trade possible for you. It might be different for somebody else. They have a totally different risk appetite, totally different methods, totally different way of trading. And that's one of the reasons why when people, you know, when I ask a bunch of questions about, well, you know, what's your performance, you know, what's this, or the system profitable? It's like, no, the trader's profitable. The system's never profitable. You know, and then there's the traders that say, well, why don't, if it's system's so good, write an EA. Well, I mean, there's a lot of factors in it, and maybe there could be some artificial intelligence put in where, on the one hand, in this exact same position, it would exit, and another same position, it would wait, and in another same position, it would add into the trade, enter another trade. But you have to decide all that. And the thing is, a lot of this is just seat of the pants, intuition, gut feel. What do I see on the chart? You know, it's like, okay, it's still making higher highs. I might want to ride this sucker out. I mean, we've got 8 higher highs in a row, 2 higher lows in a row. We got this outside bar. There's an outside bar break for 5+ pips, it looks like. So anyway, fellow traders, trading is not risky unless you take a lot of risk, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.